Ahoy there, traders. How are we doing? Thank you all for your patience while I was just making sure that everything was recording. And it is. Hi, Adrian, Stephen, Jason, Kyle. Nokia 7 in the house. Whoever that is, welcome. Azama, Rob. Hello, Rob. Rodrigo. Great chatting with you. Stephen and Vito. So just a small group of people this week. Hello, hello, hello. Nonetheless, let's get rocking on it. Let's get rolling. Topic of conversation this week is going to be avoiding FOMO trading, which is fear of missing out. How do we do it? What is it? We're going to explore it. It's going to be very brief. I have slides, but it will be brief on that side of things. And then we'll just dig into the charts and find some opportunities. So with that said, let's go and press play on the slides. Cool. So typical agenda. I think everyone's regular, but if you're watching this on the replay or on YouTube, then the typical agenda is it takes about 10, 20 minutes to kind of go through today's session. But we'll spend about 30 minutes to 60 minutes looking at the charts. We'll review anything, and essentially we're going to look at that, avoiding FOMO in trading. So my name is Phil Newton. I am not a Wall Street guru. I am someone who has figured it out and tried to codify what I do so that it is simple to replicate. And one of the great things that I truly enjoy about this is it is replicatable. I literally had someone this morning who's placed their first trade on, and it's almost a carbon copy of the model trade that we keep using. So that's great. I love getting that feedback, and it's just wonderful to see. Anyway, it's replicatable is all I'm trying to get to. I'm just a regular guy. Again, as I said, I've not worked in Wall Street. I did figure it out. My very, very, very brief backstory is I've got Crohn's disease. I don't want to spend hours flicking through chart after chart, and more specifically, I can't. While my condition is mild and inactive, I have permanent mild symptoms. So I do get tired really easily, fatigued. And I want this system for myself more than anything. But as it turns out, it means that, busy professionals like you get to, reap the benefits of my hard work over the last 27 years. So you get to see your own successes. That said, I've been trading full-time since 2001. I've been hand-drawing charts since the early 90s. Been calling most of my trades in real time since 2004. I've managed private clients' accounts and ran my own trading funds with assets under management of 10.3 million. I've coached thousands of students with my programs. I've personally mentored 756 traders from retail through to hedge fund owners, banks, and institutions. I've specialized in Forex for, the first 12 years of my career. And I've been trading futures, stock options for over 25 years, 27 to be precise. Currently specialize in stocks and stock options. And the one thing that is universally true is I am obsessed with helping serious traders just like you get your successes, to see the similar type of success that I've been very fortunate to have. And again, it's not been a straight line. It's not been a straight path. I'm not going to blow wind in anyone's sails to say that this is an easy career path, but it is a career path that can be followed. And I've done most of this in a very short space of time through the day. I spent several years just in maintenance mode, doing this about 20 to 30 minutes a day. My parents in the last 5 years of their lives were very ill, as it turns out. And, this system that we go through, it allowed me to basically go and spend every day with them, 2 or 3 hours every day, and go and care for my parents. And none of this wouldn't be possible without trading the markets. So again, I just want to reinforce, it's for me first and foremost, and I really enjoy helping traders get successes, whether, in some small way with these free sessions and, really in depth if you're one of my students. Anyway, avoiding FOMO in trading. Just a few slides and then we'll dip into the charts. It's more of I want to point things out type of session. So it should be very brief on this side of things, and then we'll go and find some trades. So avoiding FOMO. Why does FOMO happen? FOMO is essentially the fear of missing out. Why does it happen? It only happens when you don't really have well-defined trading plan, because if you have a well-defined plan, what you're doing, when you're doing, why you're doing it, with no vagaries, then that emotional impact is going to be minimized. So FOMO is essentially emotional reaction, and you because you don't have that well-defined systematic approach in however you decide to approach trading, you can easily let the emotions take over, and then it's kind of like a cascading effect. You get all these warning signs, and again, essentially from my point of view, what I've seen over the years, it's essentially a major emotional reaction. It might not seem too major, that fear of missing out, but it is essentially a major emotional reaction. You can have sweaty palms, you can it's extreme nightmares, you can have high blood pressure, palpitations, there's all sorts of weird things can happen. Essentially, you might experience regret of missing trades. There could be anger, there could be frustration of getting in or out too early. And that actually might lead to you betting the farm. YOLO, you only live once, is that kind of phrase that you might have seen recently, where people literally bet the farm, and all on a hope and a wing and a prayer that this trade that they're placing is going to be the one. And we've seen a lot of nightmare stories in the news because of the GameStop and the meme trading type stocks. And it's all, everyone wants to get rich quick, but I've got to admit, this is one of those, you can get wealthy very quickly from this, this kind of career path. But it's the exception, it's not the rule. And it's a business. It's just like any other business, and if you start to treat it that way, again, you can get really wealthy. Long-term generational wealth is developed from things like the stock markets and real estate and property investments. These are all big things, but no matter what the vocation is, it's all revolves around having a structured trading plan, just like every other business. So trading's no different. So you need a plan. Have a plan to trade. My first trading plan was quite literally and it was currencies. And it's not the surprise. It's not a million miles from fast forward 27 years. It's not a million miles away from what I'm doing now. There's more definition on what I'm doing, which we'll touch on in a moment. But it could be literally back of the envelope, a trading plan. As long as you've got one, that's more important than guesswork. And it was as simple as prices above the 200, it was the 100 period moving average. I'm going to be bullish, and I'm going to trade pullbacks. And there's a bit more to it than just for speed, but that's pretty much what I'm doing to this day. I'm trading the trend, and all the tools that we use are just really to help us define what a trend is. And again, we've been through a very detailed plan. So the point is, have strict rules. Don't just say, I'm going to buy the dip. That's like an objective. It's not a plan. I'm going to buy the dip. I'm going to trade the trend. So have strict rules and well-defined rules. How are you going to define the trend? What needs to be the criteria? What needs to happen? Is there a quality of trend? What tools are you going to use to help? What theories? Is it Dow 3, GAN 3, Elliott Wave 3? Are you going to use moving averages? Are you going to use Bollinger Bands? What are you going to do? How are you going to define it so that you can replicate it? Because it's great if you've got one trade, but I want to do the same thing again tomorrow and the day after and the day after that. So having well-defined rules allowed you to replicate what you're doing. I typically refer to what I do as a production line, and it's a production line for a reason. I want to canon, clone, and copy the trades with frequency so that I can give myself an edge in trading. And again, looking back on a 27-year career, it's been a little bit spotty from time to time. Again, I'm not going to blow wind in anyone's sails that it was plain sailing. There's been good times, there's been bad times, but 27 years later, there's been more good times than bad times. And it's all because of a trading plan, a well-defined, structured plan with good risk management. And I'm not betting the farm. It's always have small positions. I'm a fan of portfolio trading, and you could look at a portfolio style either as having 3, 4, 5 positions, a super tiny portfolio, or you could have, a dozen positions on it. Could be 50, it could be 100. I've got one student who, they're trading 200 positions at a time, and that's their comfort level. That's how they want to approach a portfolio style trading. Another way that you can do portfolio style is instead of having lots of individual trades, you can have a portfolio of strategies. Now, I teach both ways to have multiple strategies and multiple trading opportunities, multiple positions. And it's to have this portfolio of portfolios, and it works really well. And that's where I want everyone to get to. But it starts with one trade, and then you do 2 trades, and then 3 trades, and maybe that's your comfort level at the early stages of trading. You might just stay with 3 or 4 trades. But the point is you've always got some small positions on, and if you've got some exposure to the markets, then you're going to mitigate, you're going to reduce that fear of missing out, which is the whole point of this, and what you'll find is if you trade with small, it seems really counterintuitive, but when you go and do it, if you have small position size, significantly small position size, it's going to allow you to trade more frequently. So you can have this portfolio trading, and you'll have less of that, oh, I'm missing something, or stock A, stock B, stock C. You're going to have less impact, that fear of missing out in trading, the FOMO elements, because you've got lots of iterations, lots of trades, lots of little fingers in the pies, as it were. And that's what portfolio trading, it seems counterintuitive on face value if you've never done it before, but when you go and do it, it's really an eye-opening experience when you have that style of trading in place. Now, what you also need to do is with FOMO, and this is probably one of the harder parts with this mindset, is you need to accept that you're going to miss things from time to time. It could be that, hey, decided to take the day off. If you're not looking at something, if you're not scanning, like I'm doing at the absolute bare minimum. I'm currently in maintenance mode. I'm not trading. It's just I'm in maintenance because I've just spent 8 months day trading. It's quite intensive. I want to have some rest. So I've gone into maintenance mode. I'm just doing the absolute bare minimum. So that means that I will miss trades. I'm missing them, and I'm okay with that. You need to come to terms. So to help with that, because there's 28,000 stocks in the known US stock universe, reduce your universe of stocks to the best stocks. So for me to go into maintenance mode, I'm looking at the cream of the crop. So right now, I'm just looking for opportunities in my top 150. Now, as most of you know, most of the long-time followers, my master universe is about 350, 400 stocks, and still of what I consider to be the best candidates for trend trading and strong trend trading and breakouts and, some other styles of trading. I like to do a little bit of gamma scalping every now and again. But right now, because I'm in maintenance mode, I'm only looking for 2-3 trades a week instead of 2-3 trades a day. So that means that I've got my top 150. And because I've got a little bit of exposure to the markets, and I'm okay with not trading everything that could set up, I'm avoiding fear of missing out. I'm avoiding that FOMO because I've got my best stocks with my best setups, and I've got a small portfolio. So it shouldn't matter what the markets are doing. It shouldn't matter what individual trades are doing. I'm not missing anything as long as I've got some exposure to the markets. And that's the kind of the point here. I've got exposure to the markets. I'm not missing out anything. There's exposure in my account. The other thing that we can do to help with this is keep a trade journal. And I don't mean just track I traded stock XYZ today. Track your emotions. And it seems a little bit weird, and I promise you I'm not going to go all, tree hugging and bead shaking on this, but it's the emotional impact of trading that we're trying to combat when we start thinking about FOMO and all the other things that we could experience. But if you track your trade, I traded stock ABC today, blah, 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 entry, stop loss, targets, all the parameters that you're monitoring, but then also put your emotional state of mind before, during, and after the trade. Because you'd be very surprised at how you react and respond to certain trades. Now, when I did this, and I've not done it for a while, I don't need to at the moment, but I have done in the past. And early on in my trading, what I noted was when I tracked my emotions, I noticed that lots of trades that weren't working out, I'd noted down that I was confident, almost cocksure, arrogance for want of a better description with that trade. I'm really confident This looks like a good one. And they were the ones that were losing me money, consistently losing me money. And it seems counterintuitive at first to note that, but what I was able to do was track that trend. When I'm confident, overconfident, cocksure, arrogance with the trade, and I can only say these things looking back on my career, but that's what I observed. So I pay attention to my frame of mind. And for anyone who's followed these sessions for any length of time, you'll know that I also pay attention to the way that I phrase things. Could have, would have, should have. This looks like this might be a good trade. I'm not looking for coulda, woulda, shouldas. I'm looking for, again, I don't want to ever have the experience of where is the trade, the question of where's the trade. We're not playing where's Wally. I want to go, there it is right there. And this goes back to having the plan, having defined rules, having strict guidelines for what we're looking for, because my reaction to the setup that I'm looking for is, there is the trade. I'm looking for a statement. There it is right there. I'm not looking for where's the trade and that curious reaction. I'm looking for a statement. There it is right there. And I'm only able to do that by keeping a journal of trades and emotions. And I'm able to track performance. What you start doing is you'll start seeing trends inside of your own trading account, and not just with the results, but you'll also start to link them to emotional responses, emotional reactions. And that was my experience. Again, I don't know what your emotional reaction will be when you note a trade. But the ones that but conversely, going the other way, the ones that I was most nervous over, the ones that I was almost fearful of, were the ones that were the best performers. And that allowed me to have that emotional reaction, acknowledge it, and go, this is actually a good one. But my emotional reaction was fear, because I didn't have the confidence. So over a period of time, you'll be able to, to kind of, work that out in your own trading. Anyway, all of this wraps around taking it one step higher. Production line trading. And some of the philosophies that I follow is to trade small. I don't want to bet the farm. I'm not looking for one trade. And for anyone in the UK, I'm not looking to do this time next year, Rodney will be millionaires. It's a business. If you opened a shop on the high streets and you filled the stock from filled the shop floor to ceiling with the best product of the day, whatever that is, you would not on any given day expect one customer to come in and go, I'll take the lot. It doesn't happen. And for some reason, when we step into the trading world, suddenly people think that that's going to happen, and it's not. So we need to trade small. We need to trade frequently, because this is what we're trying to do with, again, going back to the business world, if we had a real business, a regular business, whether it's a shop on the high streets or business to business, business to consumer, everyone's got experience in that environment, whatever you're doing in your regular kind of day job. You don't operate a business hoping that one client is going to pay for everyone in the year. Now, again, I appreciate that some businesses, that is their business model. But if you look at all the world's most successful businesses, let's look at Apple. They've got one product. It's a little bit overpriced. They've got a certain market that they're going for, but they're not trying to just sell one product to one person. They've got one product to frequency, hundreds of thousands, if not millions of people around the world. Now, obviously, that's an extreme example. But in trading, we can do the same thing. If we trade small, if we keep our risk small and manageable and tolerable, it's going to allow us to trade frequently. And when I talk about frequency, it's the frequency that your strategy dictates. If you have a strategy and it sets up 2 trades a month, then you place 2 trades a month. If it sets up 2 trades a day, you place 2 trades a day. And that should be a dial on your strategy that you can turn. You can speed things up or you can slow things down. So as I said earlier, I've slowed things down. I've turned the frequency dial by reducing my universe of stocks to about 150. I've put myself into maintenance mode. I can log in, check trades, check outs, and go and enjoy the rest of my day. That's what I want to do at the moment. I'm spending the absolute bare minimum time. It takes me about 20 to 30 minutes tops maximum to do this. And it's that universe size, the best, the top 150, the best, the cream of the crop. So I've got a low frequency of trades at the moment. Now, when I want to speed that up, which inevitably I will do, I can turn that dial on my production line, increase my universe of stocks, increase the number of strategies that I have in play, and that trade frequency is going to go up. So that's what I mean by frequency. It's not like put 20 trades on randomly. It's like have a plan. Like you need to have a plan that gives you the frequency of trades that you want. And if you trade small, you've got this ability to have this portfolio style trading that I was just talking about. And you should never experience FOMO. You should never have that fear of missing out, because we're taking care of it on all the possible emotional reactions that we could experience by trading small. We're not going to miss out because we're trading frequently. We're going to have confidence because we've got a plan. And when you've got those boxes checked, it makes everything else that happens afterwards a lot easier, a lot tolerable. And you should have some measure of success with your trading business. Again, I refer to what I do as a production line. So just a quick reminder, production line for me is broken also into three parts. It starts with a mechanical scan. We're going to go and look at this in a moment. I don't want to flick through hundreds of charts every day. So I want to take up that universe of stocks, that 150 stocks. Which one should I look at today? Which one? So we need defined rules. What does trading the trend look like? It's defined, the certain stages, the certain criteria that I need to check. Just like a pre-flight, a pilot doing a pre-flight checklist. Has this happened? Yes, yes, yes. Great. Only then am I going to look at the charts, because this is the time-saving elements. I don't want to flick through hundreds of thousands of charts every day. It's again, we've all done it at some point, but it's just such a heart-wrenching experience. I don't want to play Where's Wally with my trading. I don't want to go, where's the trade? Look at a chart, where's the trade? And then spend an hour analyzing the chart. It's horrible. I want to be able to go, there's the trade. So when I'm doing the mechanical scan, I want to be able to, when I visually inspect it, validate. I'm expected to see a dip in an uptrend as defined by my mechanical criteria. And visually, is it there? Yes or no? Is it there? Yes or no? If yes, carry on. And then I can start looking for my entry, my exits, my targets, the trade management. I can start using a profitable trade framework to manage the trade. And I'll know all of those points before I place the trade. We should know where we're getting in, where we're getting out if it's going the wrong way, where we're getting out if it goes the right way, our targets. I want to have that planning and management in place so that I've got the confidence. I know at every structure, every stage of the process, what I'm doing. So that's the production line. That's what I want in my own trading. And this is what allows me to do these weekly sessions and then pretty much turn off and have a long weekend, which is what I plan on doing again today. Again, I mentioned in the last few weeks, that's pretty much what I've been doing. The markets will be open in literally a few minutes. We're going to go and look at them. But if there's nothing urgent that needs doing, then guess what I'm doing? I'm going to turn everything off and it's going to be a long weekend for me. We've got a bank holiday here in the UK and I'm going to take full advantage of it. Anyway, so that is FOMO trading. That is my production line trading that ties into like how we avoid that fear of missing out, and just some things to keep an eye on if you if you have that emotional reaction, the fear of missing out. You got in too early, out too late, and you see a stock that goes to the moon. Again, GameStop, the whole world had this FOMO experience earlier in the year because of the GameStop and the meme stocks. Like, I didn't trade any of them. Like, I was not missing anything because those types of stocks, those types of move, they're not on my radar. I'm not scanning for them. It's not my strategy. I never missed anything because I don't normally trade pump and dumps. It's not my strategy. Now, if it is your strategy and you didn't trade them, then you need to ask yourself why. Why didn't I trade those setups as they developed and unfolded? Again, it wasn't just GameStop. I'm just kind of illustrating. If it is your strategy, like, why? You've got to ask yourself why. Why didn't you participate in the pump and dumps? Because there's criteria and hallmarks that you can scan for to find those opportunities. Again, they're called pump and dumps. There's lots of people that do them. I don't. So I'm quite happy to have let them go. They didn't meet my trade criteria, and that's fine with me. I can't trade everything. It's not my style of trading, but what is trend trading. Let's go and take a look at the charts. So we were talking about FOMO trading. The production line of what we do is how we find things. And let me just come back to the production line again. So the production line is broken into three things. It starts off with that mechanical scan. I do that in the watch list, but what you saw me do was do the visual thing first, because I'm explaining it to you. Like, what's the end result? But the reality is, the reality is you're doing that mechanical scan first. Like, what am I looking for? I know what I'm looking for. We went through the visual, the end results. Great. Let's go and scan for it. We looked at 4 stocks that made the most sense today. And we visually confirmed that, yeah, it looks like Twitter. Great. That's what we're looking for. Now I can start thinking about an entry. I can plan entries. I can plan stop losses. I can plan targets. That's the bit that we didn't have time for today. But it doesn't take long, because guess what? We've got a similar checklist, a mechanical rule set to go and find those points, add them to our spreadsheet, and start thinking about trade entries. And, I like to trade with options. So that's the, there we go. Allows us to have some great results, as you can see there. So production line trading. So my unabashed presentation. Thank you for staying to the end. If you'd like to learn a little bit more, some of you have probably got enough from these sessions. I'm going to do these for free. There's no catches, no gimmicks, but some of you might still have more questions. You might need more assistance. So if you want to learn everything that goes into production line trading, you can learn this in usually 10 to 20 minutes. Absolute minimum. From a learning point of view, probably take you about an hour, but when you get to grips with it, you should be able to do it in 10 to 20 minutes each day. As you've seen, we want to focus on the best stocks, the best patterns, which is proven by data-driven results. You saw that in last week's workshop, where we went through some of the data, how we validate the strategy, how we validate the stocks and the universe that we have. You'll learn the TTE management. It stands for time out, target out, exit out. That's the real secret to anyone's success, is the management of the trade. Once you master it, you can spend as little as 20 minutes, which is what I'm doing. I've already done my 20 minutes of again, bunny fingers trading, and you should start to see results. If you apply a methodical trade process, you'll start to see results. You'll build trade confidence so that you can place the next trade and the one after and the one after that, because no one wants to get lucky once. It's great if it happens, but we want to have a business. Again, I refer to this as a production line, and it's about the next trade. It's always about the next trade and the next opportunity. Now, what I do promise everyone is that you should never be a zombie trading. You'll never spending hours doing the where's Wally thing and just looking for where's the trade, flicking through chart after chart. You should be able to zero in on the best opportunities every day. You'll stop stressing over if the markets are going to go up or down. In fact, you should gain confidence, because you'll be able to profit in any direction, in any market conditions, because you are zeroing in on the best opportunities. You won't have to read boring company reports, which I hate. I'm not saying that fundamentals aren't important. I'm just saying that I don't want to do it. Now, if you want to add that in, that's okay. I don't. So you should be able to profit from swing trades. My trades last from 20 to 30 days, potentially up to 90 in any market conditions. And if you'd like to join me, if you'd like to come into my little universe of trades, are you next? Do you want to learn this? Very simply, just go to AntiVestor.com and you can check out the information there. There's a new informational video. It's about 12, 13 minutes long. It'll explain what goes on. If you'd like to participate, you can send me a message. And if it's not for you, that's okay. You can see me at the same time next week, where we go through something else about trading. I've not quite decided on what we're going to talk about, but if you'd like to join us in next week's free workshop, that's great as well. So again, if you need more help, let me know. If you don't, that's okay too. So that was FOMO trading, fear of missing out, how to not miss, how to avoid fear of missing out. The headline solution is to always have a little something in the markets, always be trading. Small positions, trade frequently, or trade with the frequency that your strategy sets up, and trade with a plan. You follow those 3 things, you're not going to go wrong. Right, folks. Questions, comments. I'm a little bit early again. So I'm here for you. If you've got questions, again, I can see 1 or 2 questions which need a private response. So I'll get to those in just a moment. So if you've got anything that you want to go through, if you want to go through the charts, you want to go trading, if you want to pick stocks or 5 stocks at me, very happy to spend the next 10 minutes just going through anything that you are looking at and maybe just validate your trade ideas. What I do want to do actually, I'm not sure if he's here, but I just want to do a little well done to Chris. So Chris was just from these 3 sessions, and Chris is I've known Chris for many, many years actually, but Chris took his first trade yesterday, his first live trade yesterday, just off the free information from here. So it is possible. You don't have to sign up. Yes, I've got programs. Yes, I've got an education business. Yes, there's other things that we can do together. And this is just the tip of the iceberg. But just on the free stuff, Chris is confident enough to go and put his trade. So I just want to say well done, Chris. Let me just see if you're here. I don't think he's here. I know he's going to watch the replay later. So it is possible to, just find some great trading opportunities from the free stuff that we put out each and every week.